To the show. Now you're watching Power Breakfast on CNBC TV 18. For the first time in Indian banking history, banks are now looking at savings rate cuts. Remember, unlike current accounts when no interest is paid to depositors, savings account earn an interest which has been between 4 to 6% for the longest time, but flush with deposits after the government's note ban move. At least two large public sector banks have told CNBC TV 18 that savings rates may be reduced to below 4% levels, effectively saying that depositors will now make less money for keeping their cash in savings accounts with banks. Punjab National Bank's Usha Ananthasubramaniam as well as Bank of Baroda's PS Jayakumar both do not rule out that possibility in the future. Listen in.
The budget and the contained fiscal deficit is a positive thing. Inflation being lower is a positive thing. So the expectation of rate cut is there, but I would say banks have transmitted the cost of fund reduction at this point of time, and therefore further avenue for further reduction in interest rates seems less likely.
During this period, all of us have done, without cutting the deposit rates, we have all gone ahead and done a huge cut, in the MCLR, which is acceptable. And if you compute the month-wise, the cuts that have happened, it would be more than what RBI would have passed on together during this period.